Yeah, good morning, fellow Bitcoiners. Dave the Wave here, coming at you from Auckland, New Zealand. Nice, bright, sunny morning. I'm on the boat and I thought I'd put a video together. It's been a while since I've done one. I thought rather than focus on daily price, we'll zoom out and look at the macro and look at cycle theory, how relevant it is to this market now going forward, and also comparisons to 2017 and 2013. Right, okay, let's make a start. Now, I think most are in agreement that this comparison to 2017 has pretty much broken down. It's quite a major correction underway. Looks price seems to be coming off. Is coming off. It could most likely come off through towards the end of this year. Maybe the fourth quarter will get something going on. Other than a short-term bounce, this to me is looking like a bounce, and I think, I could be wrong, but I think it will all turn over again and roll over and come back in down here, which, you know, long term is all good, as long as the LGC remains intact. And looking at a 20k bottom in here, whether or not it bounces straight back up next year or does something a little bit different, we'll look at that later in the video. And I'll first off, let's compare this to the previous cycles. So 2017 seems to be out of favor at the moment, and a lot is starting to look at 2013. This move, or this cycle up here. I mean, it's an interesting comparison, and I have compared it myself. Where am I? Here. I compared this myself a good 2 months ago. What are we, June now? April. At the beginning of April, I thought, well, you know, this is all starting to look at irregular, and you know, I was thinking it would come off once it got to the top of this channel, and probably likely to come off a good percentage of that parabolic rise back to the previous peak. And then also, given the history of this cycle, so-called cycle, a good chance of it taking off to the upside again. Now, you know, it's a comparison, but it's a very loose comparison. This market back here is totally different. It's a much less liquid market, and hence a lot more volatile. Explosive gains and equally explosive corrections. So, you know, you can draw that comparison, but it's a very loose comparison. I wouldn't read too much in it. I certainly wouldn't be reading 5 months here, and so we need 5 months in here. And you know, I'm using a log growth curve, so when I compare it, I could see the price coming a lot lower than what other people are looking for. They're talking about 30k, a 30k base. But my main point there is that it's a very loose comparison. The other thing to keep in mind is this logarithmic growth curve is, you know, I've seen some people using this indicator here that you can find on TradingView, Bitcoin log growth curves. And this was put together a while back. I had a tweet here, you know, beginning last year, over a year ago. Yeah, this was developed. They have a program for it now. Problem is, I think it may be too high, no wiggle room to the downside, and it doesn't plateau as a as a log growth curve should do. So at the time, there was no wiggle room here, and this price went on to come down here. It wicked below my LGC, right, and then took off again. Notice when I zoom out on this indicator, it's not plateauing at all, as a logarithmic growth curve should do, right? And there is another problem with it. If I put that on here and then I zoom out, the other problem with it, of course, is it's like the curve's nowhere. It's a basic principle. It needs to plateau out, and these lines end up crossing. So there's something wrong with the program. My curves I draw by hand, by connecting as the points up and making sure it plateaus out, which has performed so far a lot better. I think most would agree, especially if this does end up being the top. It was not far off the top here, and it caught the bottom a lot better also, right? So only wicked below it and didn't close below it. So as far as performance goes, the LGC, the real LGC, is performing a lot better. I would say this, I'm not sure about this, and it looks to be, dare I say, a fake logarithmic growth curve, because it doesn't even plateau. And you know what this plateau is all about is price discovery, right? The stabilization of price, the market cap, the capitalization of a currency. So here, when we get up to these levels, the market cap of Bitcoin is getting up towards the market cap, might even equal the market cap of gold. So it's being fully capitalized in a very speculative market. All right, let's say goodbye to this so-called logarithmic growth curve indicator, and focus now on the what are we going to go to? Let's go to another chart here. Oh, we'll focus on the cycles. I want to keep this video relatively short, maybe it tops half an hour. Okay, these are all the coins I'm looking at on my alts page. I chart these regularly. And let's go to okay, it's Bitcoin. This is the Bitstamp chart. All right, so cycle theory. I'm starting to question the whole idea of a cycle. You know, we had a 4-year cycle here. Most people have the idea of a 4-year cycle. There's also a few people talking about a lengthening cycle. I'm wondering if it makes sense to talk about cycles at all now, given that this market is becoming increasingly liquid, and you know, you're going to see these big cycles breaking up. Let's go back to the Brave New Coin. So we had a 3-year cycle, arguably 4-year cycle, And the idea being that if this is length, this principle is extended to the next one, we get a 5-year cycle. And yeah, you know, it's an interesting idea, and it's certainly somewhat an idea that I was looking at in 2018, right? I had a this idea of a lengthened cycle here, diminishing returns. You can see this all on here, 2018. I went in an article in 2018 also. I wrote about this, looked at the history of it. I'll link that to the video for those who'd like to have a read of that. So you know, it was good. It was an interesting idea, but it was one I became quite dubious about. The thing is with ideas, you've got to always hold them at arm's length unless you become too enamored with them, or certainly don't want to fall in love with them. But it became I think with this rise here, this little parabola in 2019, it sort of made you rethink this idea of a 5-year lengthened cycle. Oh, it didn't, you know, it come up, and the theory was it would correct back to the curve, and sure enough, it did. So it was kind of like a little bit of an anomaly compared to the very regular previous 4-year cycle, right? And then that would have been fine if it just carried along, chugging away, and made a steady rise back to a peak a year or two later. But hello, instead we get another parabolic spike. So what was an anomaly is now it's starting to look like this is kind of throwing into doubt this idea of a regular cycle, multi-year, whether 4-year or 5-year or 6-year cycles. Arguably, this could be called a 3-year cycle, 1, 2, 3. Unless, of course, I mean, technically, if it does come back and then does a double top, a la 2013, technically you could say, yep, okay, that was a lengthened cycle. But here's the thing. It starts to all get a bit silly, because then you start saying, well, okay, if it's lengthening cycles and that was a 5-year cycle, the next one has to be a 6-year cycle. And that looks all pretty improbable. And the next one, a 7-year cycle. You see it all starts to get a bit silly, right? That, you know, and an increasingly liquid market, this is all breaking up. This nice idea of a multi-year cycle, like a big ice sheet, is being broken up in the warmer waters of more liquidity. So what's going on here, I think, is you're seeing the cycles break up into speculative episodes. So you get these shorter term speculative episodes. Now, I mean, yeah, once it could peak out here, and then it's very little chance it's going to follow this. And if it does something like that, I mean, it gets a bit ridiculous if you say, okay, that's still a 7-year, an extended cycle. So what's likely here to going forward? I think the main data point to keep a track of is the peak back to the log growth curve. Let's get rid of these extended cycles altogether, and start thinking in terms of okay, it's topped out. We've had a top, right? It's correcting. It's a top and it's a major correction here, right? Just as these were. And the picture starts looking quite different. So now we're kind of looking at this consolidation back to the base, and then a movement up, and then a breakout. Consolidation back to the base, then a movement up, then a breakout. I think you're going to see a consolidation back to the base, and this time a very good chance of hitting the previous highs. So both the previous peak and the base support here. And it's a principle of the LGC that at some point price correction is going to meet the previous peak. It's just the logic of the LGC going forward. So you could very well see it this time. It could even go right deeply into the base of the LGC as it has previously. Who knows? But I think this line will definitely hold, given the history. So you could get, just as you've got this, a couple of years here beneath the previous peak, you could see the same thing play out here. And so the breakout would be next year or even later. Now, that might, it's sort of like what you lose in time, you gain in price. So say it broke out next year, like so, bang, went through to the end of the year, then it broke out into 22, you'd have a price of 100K odd, right? Around 100K, 120, right, on the peak. If it was a later, so say price did something like this, and then broke out at a later date, and it might, we're not talking about lengthening cycles here. We're talking rather about this is mini parabolas, right? And it's something quite messy, right? It could even be earlier. It could be early 2013, right? But the later that breakout is, the higher the price is. So there you get 150K. If it was later, you'd get a 180K. So, it's all relative, isn't it? It's still like, okay, there's a bit of extra time involved, but there's a higher price. So I don't see that as being a problem. It's just whether or not that is realistic, this double top is realistic. Now, most are focused on this double top here. So we get a top here because of cycle theory, right? Lengthened cycle theory, and because of this comparison to 2013, which should really be a very loose comparison. You can't really, especially given the, you can't read too much literally into this, given that it was a lot less liquid, the market. Let's get rid of those lines. Given it was a lot less liquid, this market, so that's why the volatility was so much higher. All right, so my take on this is that the cycle theory altogether with a 4-5 lengthening so shortening, it's all redundant, and we're in a more liquid market, and you're really looking at something more like, you know, something a lot messier, but involving a period of time coming up against this previous peak as resistance, then a breakout to the top of the channel. So what this means is we can still have very good prices in here. Look at that, 30, 40, 50, you know, anything above 20K is pretty darn good. Obviously, those that bought at the previous peak, who got caught up again, just as people got caught up in 2017, is a bit of a pain involved as price consolidates. But that, I believe, is what you're looking at going forward. Now, the go-to article, there's a bit of macro behind this, besides the technical. The go-to article for this is Cycle Theory Revisited, and I will, where I've explained this a bit more carefully, and I will put a link to that under the video. All right, so what else? I think that's about it for now. I maybe to finish off with, we'll zoom in and look at the daily price, weekly price, and I use the MACD quite a bit, and I think, you know, this is I mean, the momentum is pretty well lost, right? This MACD needs to reset to the 0 line. Those looking at 2013, yeah, I mean, it's a lot more. Once again, it's in a liquid market. It could do this. It could turn around and do that. I'm thinking what's more likely is it's going to reset to the 0 line, build up some more juice, and then make another go to this line at a later date, just as it did earlier on with this mini parabola. That's quite a massive move off the base, and you've seen another big move, come back, consolidate, move back up. I don't think you'll see the MACD above this line. This, once again, is a story of reducing volatility and diminishing returns. It's coming back. It's becoming a lot less volatile as the market matures, as this currency is capitalized, right? There's still good gains to be made, better gains to be made in some of the alts. You certainly want to have a core in Bitcoin, and also, without being too much of a Bitcoin bug, buying a few other altcoins besides. Yeah. All right, that's about it for now. If you've got any questions, feel free to leave a comment, and I hope that's helped, or at least provoked a bit of thought. And until next time, stay safe out there. That's me, Dave the Wave, over and out.